So yes, we may begin with the presentation, continue with the presentation. Here, in the previous video, we have studied about the various provisions of Constitution of India, which were discussed greatly. So some of the provisions are left here, and we have covered doctrine of reading down to fold test twin conditions for intelligible differentia, and what we have covered Article 366, which is the definition clause, which defines tax on income, agricultural income, and corporation tax. So let's begin with the next topic, which is levy versus collect. So what is levy? Levy includes imposition and assessment, but it does not include collection. So we can understand in the basic term that levy is the first stage of income tax, while the collection comes at the last stage of the income tax. So in the CCE versus National Tobacco Company of India Limited AR 1972, the term levy may include imposition and assessment, but it does not include collection. So Article 265 is applicable not only for levy and but also for collection of taxes. And expression assessment within its compass covers both aspects carried out by executive functionary. In TTK Prestige Limited versus Union of India 2020. So we have studied Article 265 in the previous video. Next is how can a levy be lifted, suspended, or withdrawn? Levy can only be created by a statute. It can only be levy created by a statute can only be lifted, suspended, or withdrawn by a statute, or in the manner prescribed by a statute creating the levy. So obviously, the statutory authority is the basic body which can lift, suspend, or withdraw a levy. The dispensing with the levy or payment of tax is a serious matter. These are the conditions that are held in ITC Bhadrachalam Paper Boards versus Mandal Revenue Officer in 1998. The Supreme Court of India has held that levy can only be lifted, suspended, or withdrawn by the statute who created that statute, by the statute only. So, when such powers are conferred by legislature upon another authority, that authority has and can exercise only that authority can and exercise that power in strict compliance with the requirement of the provisions conferring that power. So it is in the general public that such that notifications are to be given wide publicity, but there should also be no dispute with respect to the date of their making or with respect to the language and contents thereof. So now next we will talk about surcharge. So obviously surcharge will be covered in the incoming video lectures where the Income Tax Act will be collaborated with surcharge, the term surcharge. But here, as per our constitutional provisions, Article 269 and 270 and Article 271 provides that Parliament may at any time increase any of the duties or taxes referred to it to in those articles by surcharge for purpose of the union, and the whole proceeds of any surcharge whole proceeds of any such charge is to be taken into serious consideration here, which forms the part of the consolidated fund of India. So what are net proceeds? Here we have taken the whole proceeds of any such charge. So let's discuss about net proceed, which is given in Article 279 subclause 1 in Constitution of India. Net proceeds means relation to any tax or duty that proceeds thereof reduced by the cost of collection. For the purpose of these provisions, the net proceeds of any tax or duty, or of any part of any tax or duty, in or attributable to any area, shall be ascertained and certified by the CAG, Controller and Auditor General of India, whose certificate shall be final. So only the Controller and Auditor General of India has the authority in relation to any tax or duty for reduce of cost of collection for the purpose of these present net proceeds of any tax or duty. So in TM Kanyan versus Income Tax Officer in 1968, here the term the it was held that it is not necessary to make any distribution of income tax with respect to UT, as these territories are centrally administered through the president. Obviously, Controller and Auditor General of India is administered through the president only. So let's revise what we have studied till now. Article 265, which states that constitutional validity of a tax. So no tax shall be levied or collected except by the authority of law. Law enacted must be. So law should be enacted by competent legislature only. No executive authority. We have also studied in the previous video lecture that no executive authority can order any provisions related to tax. So, and further we studied about levy. Levy means imposition plus assessment, and collection means recovery. So, levy is imposed at the first stage of income tax, and collection is the last stage of income tax. So, what is doctrine of reading down? Doctrine of reading down is basically used when we have to challenge a statute, and a statute can only be challenged, or the doctrine of reading down can only be applied when a statute is ambiguous or silent. The term which is not cleared enough, it can only be applied there. Where the statute is clear and express, the declare court declares that if it was intravire or ultravire act of the legislation. So Article 14, what we have studied in Article 14 is twin test of reasonable classification. That is intelligible differentia and rational nexus. Here the example of two friends in which one friend was one in which I am earning, in which one friend is earning rupees 5 and another friend is earning rupees 5. So same law should be applicable to both of them in relation to tax. However, if one friend is earning rupees 5 and another friend is earning rupees 100, the same statute, same law cannot decide what amount of tax can be taken, collected or levied. So it is reasonable classification is done here. So Article 14 also Article 14 is greatly interpreted by the Supreme Court of India, clearly stating that tax legislation is a greater latitude. So here the principle is presumption of constitutionality. Obviously, the tax law is presumed to be constitutional unless and until challenged by somebody. So under classification, under classification is not automatically invalid. Here the where the CAs were appointed from a certain firm, partnership firms. However, the rest of the firms were not eligible enough. The Supreme Court of India has clearly said that under classification was invalid. We have studied this in the previous video lecture. So play in the joints. So legislation has very flexible in creating a statute, and tax law is this flexibility is given in tax law. So judicial deference. Courts avoid economic policy review. That is the main work. Why do courts avoid? The main work is done by the legislature itself. So what is levy versus collection? So meaning in the aspect of meaning, levy is imposition of tax, collection is recovery of tax. Assessment is done by levy, while the collection is to be enforced. Authority required must be by law. It should also the collection is also by law. Both are constitutionally in given in Article 265 of in Constitution of India. So territorial nexus, tax jurisdiction. Rather it will I would say that it also covered the scope of the Income Tax Indian Income Tax Act 1961, where we have studied that source, either the source or the resident, the source of the income should be from India, or every resident of India is governed by the Income Tax Act of India 1961. So when either of the conditions are satisfied, the Income Tax Act has the jurisdiction. So thank you, and we shall cover in our next lecture, that is nature and scope of Income Tax Act. And I hope you all get the knowledge of the basic principles or basic constitutionality of the Income Tax Act in India, and how these provisions of constitution are valid, and Income Tax Act fully satisfied those conditions of Constitution of India. Thanking you once again, and hereby this video is purely meant for education purpose, and disclaimer is there, while every care was taken while making this video, it is highly requested that contents of this video may be cross verified at the viewer's discretion, as interpretation of law keeps on changing, being the constitution is a living body. So yes, I hope